Let's turn to business news now with our business editor, Giles Beckford, who is beaming in from Wellington. Giles, you've got a couple of bits of data that are usually kind of reliable indicators, aren't they, of where the economy's at?
They give us a little indication, John, of the pulse of the economy. One of them was building consents. Now, this is, of course, quite topical at the moment, so that we get some idea about the level of activity that is in the pipeline. Building consents for July, the month of July, were up 16% on June, but more importantly, up 16% on the same month a year ago. So it shows there that finally we're starting to see some sort of lift in the building activity, residential building in particular, and that this is where we're going to start bridging that gap between the supply and the demand. More importantly, the business confidence survey out from the RNZ Bank this afternoon has shown that although it's come off a 6-month high, firms themselves are relatively upbeat about their own prospects and their own outlooks. They expect to see better profits. They're expecting to invest more money in their businesses. And overall, they see, for instance, that the construction industry is going to go really strong and will drive the economy. So two positive bits of data there. One little sour note one might detect there from Cameron Bagri, who's the chief economist at ANZ, and he just notes that there's a problem with rising debt levels in this country, almost as if we were trying to borrow and spend our way to growth rather than earn it. And of course, that does raise the issue that if the Reserve Bank cuts interest rates further, whether it throws a bit more fuel on that fire. But we'll wait and see for the time being.
It's fascinating, this, isn't it? Because the banks have been saying this a bit lately, but they've been the people who've been allowing everyone to borrow, haven't they?
Oh, of course. No bank is ever going to turn down the prospect of making a margin on giving a decent loan to a decent borrower. And I mean, that is the nature of capitalism. It's the nature of banking. And precisely that.
In a nutshell.
I mean, it's interesting that somebody like Dave Hisco, who's the chief executive of ANZ...
Absolutely. He was on Checkpoint a couple of weeks ago.
That's right. And should come out and start raising the flag, saying, let's just be careful here. And clearly that's going through a lot of people's minds, whether it's Reserve Bank, bankers or politicians.
Right. What's on the agenda for next week, Giles?
Well, I think it's always worth having a look forward. The big thing, I think, is Fonterra. Monday morning, we expect Fonterra to come out with an update on its milk payout forecast. The expectation is it will probably stick with $4.25 a kilo of milk solids. It's very early in the season, but there's certainly not very much in the way of the dairy auction so far to suggest that there's any reason to raise it. But perhaps we can also take some comfort that perhaps there's not too many reasons for it to lower it. And we'll also have wage and salary numbers, which will show that it's pretty benign out there for wage pressures. And that's why we're still working here and rattling a can, see if we can get a pay rise from somebody. Yeah.
How do the markets end the week?
Well, top 50 index on the shares. Gangbusters again, up 49 points at 7356. That's a record. Kiwi dollar, 70.9 US cents, 94.1 Australian. If you're headed to the Olympics, here's a little bit of useful consumer news. The New Zealand dollar will buy you 2.3 Brazilian reals, or to turn it the other way around, each Brazilian real is worth about 43 New Zealand cents. Enjoy the games.
Yeah, thank you very much, Giles. Giles Beckford, our business editor, ending the week.